Hi, welcome to another edition of HPA Global Insights. Today we have a reoccurring friend here, Brian Negley, U.S. Advisor for Early Data. He's going to go over Q3 of online sales in China for health supplements. Brian, how you doing today?
I'm very well, thank you. And how are you doing, Jeff?
I'm doing well as well. Um, so again, like last time, Q2, we started the show and said, hey, China's economy is not doing good, the news, blah, blah, blah. It's still the same thing. China is still having struggles. I have family in China and lots of friends, so I still kind of keep in touch and then of course the mainstream media news, which you see. So overall, the economy is not doing so well, but our industry of health products continues to march forward, and it looks like we have some really good news to share, right?
That's right. Yeah, when we get into it, we'll look at the details. But yeah, health supplements continues to defy expectations and even gravity a bit. It just keeps growing and growing. So that's good news for your audience. I think there's remains to be a lot
Definitely,
of opportunity there.
definitely. All right, so I know you got a really awesome presentation. Let's get that loaded up and give us some good news.
All righty, will do. I'm loading up right now. Well, welcome everyone. And Jeff, thank you again for the great introduction. It's nice to be back and presenting data from the company that I represent here in the US, Early Data. Um, so I'll give you a few slides just about Early Data, what we do. Um, we track wellness products. We track them online. There's a number of things we measure on an ongoing basis. We'll be looking at a lot of that data today. But we tracked it, as it says here, we track products, what their sales are. And then from that we can derive, market size, market growth, market shares, things like that. We also have a price monitoring product that we track as well. That's a little different product we won't go into today, but we also do that. So in terms of the category monitoring product that we have, again, it gives an overview of the category, and then you can drill down into various subcategories and look at how those are performing, shares of the platform, shares of the manufacturers, brands, all that stuff. Okay. In terms of the platforms we cover, it's pretty self-explanatory, I think, but these are the platforms that we cover. And we have a number of clients that we're happy to work with, and this is just a sampling of those clients. Okay. So with that, some caveats about the data that I'm going to show you just to keep in mind. So the most recent period is September 2023. Year-on-year analysis will be done with a 4-month overlap. Usually it's done with a 12-month and a 6-month overlap. The reason I'm using 4 is because we started tracking Douyin in June of 2022, and I wanted to include that in these year-on-year analyses. Therefore, that only gives us 4 months of 2023 and 2022 overlap. But I think it's important to include Douyin because they're a big player, and they've changed the landscape of what we're looking at. We divide our platforms into domestic and cross-border. Domestic are those that are based in China and sell, have the products there or have license to sell in China. Cross-border items coming from often foreign manufacturers for sale into China. They don't go through all the same rules and regulations, but it's a lot of the same players that sell those products. So the domestic players that we cover, the Alibaba platforms, Taobao, Tmall, Call is also owned by Alibaba. Then there's Jingdong, VIP, Pinduoduo, Suning, and then the recent addition, Douyin. And then basically all of those cross-border counterparts listed below, we also track those. Okay. And the final note is when we get sales figures, some of the sites we get sales figures directly from. You can just take them directly from the sites. Others we model. Okay. All right, with that in mind, here's the agenda that we'll be looking at, kind of 3 pieces to the presentation: a market overview, and we'll be looking at growth by platform, followed by growth of key segments. And then finally, we'll have a look at key manufacturer shares and growth. Okay. So just a bit of background first. China itself is growing, but not at the rate it once was. It's probably a little bit better than during COVID. But the Q3 reported growth was 4.9 versus 2022. The Q3 GDP versus Q2 2023, excuse me, was 1.3. And the year-to-date reported GDP growth is 5.5. All right. If you just focus on September and look at break those down by some different sectors, retail sales grew about 5.5% in September. Industrial a little bit less at 4.5. Fixed assets at 3.1. Property remains an issue in China. It was reported down minus 9.1 on a year-to-date basis. So there's some good news, bad news. That's probably the worst news of the largest sectors there. Inflation is reported as flat. Okay, and then finally, the 10 years in China are at a little bit at 2.7, so quite different than what we're used to here in the U.S. And that affects investments, obviously. Okay, so that's kind of a larger picture. Now we're just going to start looking at health supplements. Okay, and again, keeping in mind we're looking at the 4 months of June through September 2023 versus those same 4 months in 2022. On a value basis, that's a sales value basis, or GMV as my term, and it's about 29%, 28.8% growth. Okay, so market's growing really strongly, much more than what we just saw of the Chinese GDP numbers. On a volume or a unit basis, it grew about 20.3%, still really high. The market size is about 100 billion, and that's a 12-month figure. It's about 100 billion. And that translates at current exchange rates to about a little under 14 billion US and a little over 700 million units. Okay. If we break that 28.8% down into what I just described earlier, or what I described earlier as domestic and cross-border platforms, cross-border platforms are growing at twice the rate, okay, than domestic platforms, 41% versus a little bit over 20%. Okay. If we drill down and we look at the actual domestic and cross-border platforms and look at their relative size or their share and their growth, first we'll concentrate on the orange box on the left. These are all domestic platforms: Jingdong, Tmall, Douyin, etc. That second column, share of domestic, is if you take the domestic platforms as a whole and call it 100. Jingdong has a little bit over 30% of that, Tmall 25%, all the way down. And you can see the growth rates. Now, they're all positive, but keep in mind that the benchmark is about 29%, because that's the overall category growth rate. Most of those growth rates, certainly for JD and Tmall, are below that benchmark. Even Douyin is a little bit below that benchmark. The smaller platforms are above that 29% benchmark. So there's growth, but it's, at least in the leading domestic platforms, it's lagging. Now, if we flip over and look at the purple box, the cross-border platforms, Tmall Hong Kong, Jingdong Worldwide, etc. Again, there's the share. So Tmall Hong Kong is the biggest cross-border platform at 34%, followed by Jingdong Worldwide at a little bit over 26%, etc. If you look at that final column, the growth numbers, you can see much larger growth here, which is just basically an extrapolation of that chart we just looked at, where overall cross-border platforms are growing at twice the rate of domestic. Tmall growing at 37%. Jingdong Worldwide actually lagging a little bit, relatively speaking. The big winner, Douyin Global, 125%. So they've more than doubled, much more than their domestic counterpart of Douyin at plus 25. Again, that's plus 125. So they've more than doubled sales. Okay, that's probably one of the big takeouts of the entire presentation, is the rise of Douyin Global. Okay, if we look at month-by-month share performance of all the domestic platforms and all the cross-border platforms. So basically, if you add up the share of those two, you'll get 100. So if you go back to this first number here, hopefully you can see my arrow, that's June 2022. The share of domestic platforms was 59.2, cross-border shares are 40.8. So you can see, a year ago, last summer, domestic basically had about 60, cross-border is about 40. Then as you move through the end of 2022 and early 2023, you get some movement by cross-border. They gain share. First thing to note is in the promotional periods of 11/11, the big November promotional period, and that also holds true for 618 promotion. Generally speaking, cross-border does better. Okay, so you get some movement in cross-border, then you get some reversion back. Domestic regains in summer of this year, but it's not to the level it once was. Basically, last year they were about 60% domestic was, and this year they've kind of got some up and down, so they're not as strong. Long story short, cross-border making gains at the expense of domestic, growing faster. Okay, and the last thing I'll look at is the average price per pack, and that's gone up, as you might suspect. Okay, the average price per pack has gone up about 7.1%. Now, there can be various reasons for this. Okay, one is pure price increase, which we suspect is actually pretty low given zero inflation. So what this likely indicates is a shift to higher priced items and or shift to larger packs, which have a higher price point. But again, overall price per pack is up 7% in category. So move to the second segment. Now we're gonna the second part of the agenda. We're gonna look at segment growth. Okay. So another way to slice the market is when we just looked at platforms. Now we're going to slice the market. And we're going to look at segments. Okay. So these are the top 10 segments. Top segment is probiotic, followed by calcium, collagen, etc. And the second or the middle column is their share of the market. So probiotic share of the market was 11% for the June through September period. Calcium was 10.2%, collagen 7.9%, DHA 7.3%, etc. The final column on the right shows growth. What was the growth versus a year ago? And again, reminding you that the overall category itself grew about 29%. Well, probiotic didn't grow at all, zero growth. So they lagged. No growth at all. They lagged big time. Calcium grew faster than the market, 43%. DHA at 50% grew faster than the market. Protein powder enzyme, negative growth, so they're well below the market. And those bottom four grew faster than the market. So another way to look at that and think about that is there was 28% growth in the market. Which segments captured most of those growth? Okay, so on the left here, just a simple diagram showing, sales. This is just a representative diagram. Sales in 2022. I'll try to get that arrow back up if I can. In 2023, and that red part, 28.8% growth. Basically, who got that growth? And what percent of that growth was obtained by which segments? Okay. What this pie chart shows is DHA captured 10.9, a little bit under 11% of that new growth. Okay, so they got the lion's share out of the segments of that growth, followed closely by calcium. Calcium got 10.8% of that growth in red. Multivitamin is 10.1% of that growth, and all the way through the pie. The six segments, those are six of the top 10 of the chart we just saw, captured more than half of the growth. If you add up those 6 parts, it's a little over 50%. So they did really well, and the remaining segments capture the remaining the other 47% of that growth. It's also interesting. It's also good to note here that probiotic captured no new growth because they had no growth, so they didn't capture any of that. Okay. One more look at segment growth. So we'll take those 6 segments that grew the fastest of the top 10, and we're going to plot them out. And those are the segment names on the far left. And this next set of numbers over was their growth in the market. So again, DHA grew. We saw these numbers before, but DHA grew 50%, calcium 43%, etc. Okay. Now we're going to look at their growth in the key domestic and the key cross-border platforms. Okay. So the growth of those segments in Tmall only, DHA grew 11% in Tmall. Calcium grew 16% in Tmall. Multivitamins grew 24% in Tmall, all the way down. So as you can see, while all those segments did grow in Tmall, they grew lower than the market. And one thing to help identify this phenomenon was anything in red is a market growth less than the overall market. So 11% is less than 50% of the market, 16% is less than 43%, etc. As you can see, all the growth rates in Tmall are red, less than the market. Next column over, JD, all the growth rates in Jingdong domestic were higher than the market. So Jingdong did really well, and they did really well in the key segments. And then Douyin Global was a mixed bag. Okay. Now we're going to go to the green on the right. These are the key cross-border platforms. probably very apparent, but all these segments grew really rapidly in Douyin Global. Okay, doubled, tripled, and much faster than the market and much faster than anywhere else. Okay, Tmall Hong Kong, general and worldwide, as you can see, a mix of black and red, so therefore a mixed bag. Okay. And just to highlight a few winners, DHA was the segment that grew the most. We'll look at the manufacturers, the top 5 manufacturers, and of those top manufacturers who really grew. So this is just within DHA. So Bio Island is the leading manufacturer in DHA with a little over 9.9 share, 9.1 to be precise, but they had negative growth, so they actually lost. Swiss is the number 2 player in DHA. Their share was 4.9. They grew 62%. Okay. So as you can see, Swiss and Eric Favre grew the most of the top 5. And there's respective shares and growth rates. And a couple of representative products for Swiss, their odorless fish oil, that's their top product in DHA. And the Eric Favre DHA leading product is the one at the bottom with the child. Okay. We'll do the same thing also for calcium. By Health is the leader in calcium with an 8% share. They do 58%. You can also see the other top manufacturers. Caltrate was another one that grew really strongly at 57%. And you can see that By Health leading calcium item. I believe that's on Tmall and the Caltrate item. I think that's another Tmall item. Okay. So just to give you a sense of the leading and the growing segments, again, those 6 segments, the ones that I identified that grew the most in the top 10, got more than half of the new growth. Okay. All right, one more slice of the market, and that's manufacturers. Okay. These are the top 10 manufacturers listed over on the far left. So H&H is the top manufacturer, followed by Health, et cetera. Okay. Some key brands listed as well. So for example, H&H key brands are Swiss and Biostime. Swiss is the vast majority of what they do. Biostime just has a slice of the overall H&H portfolio. By Health is the By Health brand, et cetera, et cetera. Okay. So H&H and By Health, as we've seen before, and we're seeing again, they're 1 and 2. They kind of bounce back and forth. And we'll look at that in the ensuing charts. But in that June to September period, H&H was the leading manufacturer, 6.7 share, followed by Health at 6.2, all the way down. Interesting to note that top 4 manufacturers, H&H, By Health, Tongwentang, and Shandong Shibote, they all grew, but they all grew less than the category. Okay, because again, that category benchmark was close to 29%. So again, they all grew, but they all grew less than 29%. GNC, which is a distant 5th, grew rapidly. They grew a lot, 171% to be precise. And then rounding out the top 10, the other big grower was Child Life. Okay, so what this also indicates is there are smaller manufacturers, and in the time to list them all, get into them, but there are smaller manufacturers that are outgrowing the category and outgrowing these top 10. GNC, we noted the number 5 manufacturer was the fastest grower of the top 10. These are their sales over that period. So this is in millions of RMB. So last June, it's a promotional period, about 64 million RMB. Then they go down to low mid 30s in the fall period. 11/11, they come up to 100. Fast forward to this year. This year in June, with the June promotional period, they did 154. So their 618 sales were more than double of last year. And then the last 3 months, they've been triple. So it's really been this past summer where GNC really rocketed it up. And if you look at their top 15 items, they basically play on Tmall Hong Kong. And as we've seen before, Tmall Hong Kong performance has been mixed, not that great. But they're mainly a Tmall Hong Kong player. Multi-items are their big items. 3 of their top 6 items are male, female, and child multivitamin items, respectively. Their top item is a liver health item. Okay, so they primarily play on Tmall Hong Kong. Also interesting to note, though, 4 of their top 15 items are sold on Douyin Global. So they've been part of the picking up of growth on Douyin Global. Okay. Including two multi-packs, the ones kind of, I think, number 12 and 13, respectively. All right. Last thing we'll do is look at By Health and H&H. They kind of set the tone for the whole category because they're number 1 and number 2, and they have been for a long time. If you go back a long time, By Health was the share leader. H&H caught up to them. By Health had some share declines. They've kind of both leveled off. And as you can see by the red and blue lines, by health in blue, H&H in red, there's a lot of back and forth. If you look at the past 16 months, they kind of flip. From early this year, H&H has taken over the number one position, not by much, but they've outgrown. The one exception is the last period where Buy Health exceeds H&H share just by a little bit. But they basically have been going back and forth for the past 16 months. If you look at where they're growing, as you might suspect, because one mainly a foreign player, one's a domestic player, H&H in red on the left. These are their key platforms. First, we'll look at the column over here. What percent of sales does each platform account for? So, Tmall Hong Kong does 35% of H&H sales, Jingdong Worldwide 20%, etc. So, not surprisingly, it's the cross-border platforms that account for most, not all, but most of H&H sales. They've grown fastest on Tmall Hong Kong. So, despite Tmall Hong Kong lagging, as we've seen before, H&H themselves have done really well. Okay, not so good on Jingdong Worldwide, very well on VIP Worldwide and Tmall Domestic. They made inroads on the domestic platforms over the past couple of years, and it's showing here with really strong growth on Tmall Domestic. Go over to the blue side, that's Buy Health, opposite of what we see with H&H. They dominate on domestic platforms, being the big domestic player. Their top two platforms are Jingdong and Tmall, respectively. They've done very well on Jingdong, not good on Tmall. Interestingly, they've grown rapidly on Douyin Global. Okay, so they're a domestic player. They mainly play on domestic platforms, but they've more than doubled their sales on Douyin Global. Okay. The last thing we'll look at for manufacturers is just manufacturers by origin of product, and the chart with the green bars on the left shows share of foreign manufacturers. So Chinese manufacturers account for 28% of the market, followed by U.S. manufacturers 18.5%, Australia 13.5%, etc. Okay, so Chinese manufacturers are share leaders, which shouldn't come as a surprise. If you look at the growth rates, it's a different story. Chinese have lagged. Again, keeping in mind that 29% benchmark, Chinese manufacturers have had negative growth, slightly, -1. Almost all foreign manufacturers, Japan accepted, but almost all foreign manufacturers have grown, and most of them have exceeded that 28.8% benchmark, particularly the US, Germany, New Zealand, and Canada. Okay. Where have foreign manufacturers grown? Okay, so this is just the foreign manufacturers and share of platforms. So those foreign manufacturers that we just saw, Tmall Hong Kong accounts for 24% of their sales, Jingdong a little bit under 21% at 20.9, Douyin Global 11.9, etc. Okay, so not surprisingly, it's the cross-border platforms that account for the bulk of foreign manufacturer sales. However, when it comes to growth, Tmall Hong Kong, Jingdong Worldwide have lagged that 29% benchmark. As we've seen before, Douyin Global, the big winner. So foreign manufacturers, even though Douyin Global is a clear number 3, they've grown 76% on Douyin Global. Okay, not so good on the next set. When we get to the bottom part, okay, Taobao, Kala, cross-border, Pinduoduo, etc., those bottom 5 that round out this list is another area where foreign manufacturers have grown. So that just shows where the newer opportunities can be for foreign manufacturers. All right. Okay, and I will summarize now. So online health supplements remain strong. Okay, we saw overall China growth, mid-single digits, but the online health supplements market really strong, 29% on a value basis, a little bit under, and a bit over 20% on a volume basis. Cross-border platforms outgrew their domestic counterparts at twice the rate. And once again, I'll say it, sales on Douyin Global, super strong, more than doubled. And they have been the key driver of growth past few months. Okay, looking at segments, calcium, DHA, there were 6, but altogether calcium and DHA led those 6. But those 6 segments captured over half of the new growth. Probiotics, no growth. They're the segment leader, but no growth so far in 2023. And in looking at the manufacturers, the top 4 manufacturers grew, but they grew less than the category. Okay. In that top 10, GNC and Child Life were the ones that really outperformed. And foreign manufacturers outperformed their Chinese counterparts. All right. And with that, I will close. Thank you very much.
All right, Brian, thank you so much for that in-depth, as always, in-depth review. A couple of things a little surprising. One, I was taking some notes. Probiotics, zero growth. So I think most likely, I think probiotics have just been growing like gangbusters the last 5 years, so much so that at some point that growth has to kind of slow down. And in this case, it's kind of leveled off.
It's not to downplay it. They still are the leading segment.
Sure.
But we've seen their growth because you're right, they really grew big time for a couple of years. They actually were the not only were they the leading segment, they were the leading grower in terms of growth rate, but that growth rate's been slowing down for a while. So it's not to say that they won't come back, but just looking at again, and again, we're only talking about a 4-month overlap period, the June through September period, but that growth was zero. And those other segments clearly outgrew them.
The other one was domestic players now following, where the growth is. And so you're finding domestic players on these cross-border channels, which never happened before. And technically, wasn't really ever supposed to happen. Cross-border was specifically set up for foreign companies to sell their products to Chinese citizens directly. So they, the domestic companies have found ways to, get their products on these cross-border platforms.
Yeah, I mean, there's various ways of getting products on platforms, because you and I are both in country, as we know. But yeah, that's been interesting to see it, and it's happened both ways. Again, using HH as an example, for the longest time, they were almost exclusively cross-border, but as we saw, they're also on domestic platforms. So, yeah.
Yeah, and BioHealth and some other ones as well. That makes sense. They're just chasing the growth. And
why not? I mean, because you probably have different consumers, different occasions, et cetera, shopping on those respective cross-border versus domestic platforms. So if you can increase your platform coverage, why not?
Exactly. And like I said, Douyin is such an explosive social media player in China that's now an e-commerce platform. It's crazy.
When we first started tracking them again, it's just been 16 months, so it's a relatively short period of time. We did see big growth in Douyin, and they're still growing. But Douyin Global, now that we're looking at year on year, that's been interesting to see. It's surprising, but it's been interesting to see. They've really just taken off. So we'll see how they do, going forward. Again, it's just a short, 4-month versus 4-month comparison. So I don't want to make too much of it. But just looking at those 4 months, Douyin Global, really a big growth. So for manufacturers, there are certainly opportunities there.
Definitely. Okay. We'll cut it here. And Brian, again, thank you so much. Those watching, thank you for joining in. And if you have any questions for Brian or would like to, utilize their service to dig deep on your competitors, and see what they're doing, give him a call. He'll have his name card here at the end. Thanks again and have a good one. Bye-bye.
Thank you, Jeff.
Thank you for tuning in to HPA Global Insights. Please like, subscribe, and share with your colleagues. Any questions or suggestions, email us at info@uschinahpa.org. This channel is operated by US-China Health Products Association, which is a nonprofit organization. Please consider joining the association and supporting its global endeavors. Your support is very much appreciated. Until next time, take care.